welcome to the channel Get Rich. Today the company we are going to analyze is Bajaj Finserv Ltd. So Bajaj Finserv Ltd is a holding company for the various financial services business under the Bajaj Group. It serves millions of customers by providing solutions for asset acquisition through financing, asset protection through general insurance, family and income protection in the form of life and health insurance, and retirement and saving solutions. In lending, it is in the financing business through its 53% share in Bajaj Finance Ltd, which is listed on the Stock Exchange Mumbai and National Stock Exchange. Bajaj Finance Ltd has a 100% subsidiary, Bajaj Housing Finance Ltd, which is registered with the National Housing Bank as a housing finance company for its mortgage business. Bajaj Finance Ltd also has another 100% subsidiary, Bajaj Financial Securities Ltd, to address the broking business. Both Bajaj Finserv and Bajaj Finance Ltd are included in the NSE Nifty 50 index of top companies in India. The protection and savings business is done through Bajaj Allianz General Insurance Company Ltd for general insurance including health insurance, and Bajaj Allianz Life Insurance Company, which is called BALIC, for life insurance and retirement plans. Both BAGIC and BALIC are unlisted joint ventures with Allianz SE, one of the world's leading composite insurers. As on 31st March 2020, Bajaj Finserv held 74% of the equity in both general insurance and life insurance business, with the balance being held by Allianz. Bajaj Finance Ltd also participates in the savings business through its fixed deposits vertical. Bajaj Finserv remains a debt-free company. So let's look into each of this business. The first, let's have a look at Bajaj Finance Ltd, and then the general insurance, and then the life insurance, and some standalone businesses of Bajaj Finserv. If you have a look at the profit components of different companies, so in the financial year 2020, 85% of the profit are coming from Bajaj Finance Ltd, and 15% is coming from general insurance business, and 2% coming from life insurance business. And then if you are having a look at Q1 financial year 19 to 20, 78% is coming from Bajaj Finance, and 18% is coming from general insurance business, and 5% is coming from life insurance business. So if you are having a look at Q1 financial 2021, 42% is coming from Bajaj Finance, 35% is coming from general insurance, and 24% life insurance. But this is because of some one-time gain they get from both of the insurance businesses. Let's have a look at each of these businesses. Bajaj Finance Ltd, from the quarter over quarter in financial 20 and financial 2021. If you are having a look at AUM in Q1 financial 20 to Q1 financial 2021, it had a growth of 7%. If you are having a look at total income of Bajaj Finance, it had a growth of 14% quarter over quarter from financial 2020 to financial 2021. If you are having a look at PAT, profit after tax, which is reduced by 19% from Q1 financial 20 to Q1 financial 2021. If you are having a look at net NPA, it reduced from 0.64% to 0.5%. That is a good thing. Bajaj Allianz General Insurance. If you are having a look at GWP, gross written premium, it reduced by 19% from Q1 financial 20 to Q1 financial 2021. If you are having a look at investments, it increased 12% in Q1 financial 2020 to Q1 financial 2021. If you are having a look at profit after tax, it increased by 88%. Of course, this is because they have MTM gains. And then if you are having a look at combined ratio, it decreased from 103.1% to 97.6%. Combined ratio is one of the profitability measure of insurance businesses. So reducing from 103.1% to 97.6% is a good thing. And then Bajaj Allianz Life Insurance. So then if you are having a look at GWP, which is gross written premium, it reduced by 7%, and the investments increased by 5%, and profit after tax is increased by 111%. Let's break down their profit components from Q1 financial 20 to Q1 financial 2021. So Bajaj Finance gives 656 crores in Q1 financial 2020, and Bajaj Finance gave 508 crores in Q1 financial 2021. And then if you are having a look at general insurance, it was 151 crores in financial year 2020, and it was 422 crores in financial 2021. In the life insurance business is 47 crores in Q1 financial 2020 and 297 crores in Q1 financial 2021. And then Bajaj Finserv Standalone, which is quite minimal. So if you have a look at the unusual items, they have MTM gains on BAGIC and BALIC investments 330 crores post tax, and they have impact of COVID. So they have Bajaj Finance Limited contingency provision of 574 crores, which is also post tax. So then if you're having a look at Bajaj Finserv total revenue, it increased by 16% from quarter 1 financial 2020 to quarter 1 financial 2021. If you're having a look at net worth, it increased by 32%, and the profit after tax, it is increased by 44%. So then let's have a look at each of their subsidiaries in detail. So first one is Bajaj Finance Limited. So Bajaj Finance Limited, a subsidiary of Bajaj Finserv Ltd, is a deposit-taking non-banking financial company (NBFC) registered with the Reserve Bank of India. It is primarily engaged in the business of lending and has a diversified portfolio across retail, SMEs, and commercial customers with a significant presence in urban and rural India. It accepts public and corporate deposits and offers variety of financial service products to its customers. Bajaj Finance Limited has two 100% subsidiaries. One is Bajaj Housing Finance Limited and another one is Bajaj Financial Securities Limited, which is registered with Securities and Exchange Board of India. So Bajaj Housing Finance Limited started its business in 2017 to 18. Bajaj Financial Securities Limited commenced its equity broking operation in financial 2020. So it is present in 2,392 locations across the country, including 1,357 locations in rural, smaller towns and villages. Bajaj Finance Limited focuses on 6 broad categories, which is consumer lending, SME lending, commercial lending, rural lending, deposits, and partnerships and services. They have overall customer franchise of 42.95 million and cross-sell client base of 22.59 million. And they have a lot of cross-selling opportunities. 70% of new loans in quarter 1 were to existing clients. Let's have a look at their business breakdown. So in quarter 2 financial 2017, their consumer finance accounts for 46% and SME business is 39% and commercial is 12% and rural is 4%. And then if you're having a look at quarter 2 financial 2020, they have 39% of consumer finance, 25% of SME business, 10% commercial, 8% rural, and 18% mortgage business. Then if you are having a look at each of these categories, so first one is consumer. So they are the largest consumer electronics, digital products and furniture lender in India. They have presence in 1049 locations with 89,000 plus active points of sale. So they are among the largest personal loan lenders. They have EMI card franchise of over 21.5 million cards in force. They are among the largest new loan acquirers in India, 1.75 million in quarter 1 financial 2020. Bajaj Finserv MobiKwik active wallet users stood at 15.7 million as on 30 June 2020 who have linked EMI card to wallet. Bajaj Finserv RBL Bank co-branded credit card stood at 1.8 million as of 30 June 2020. If you are having a look at SMEs, they are focused on affluent SMEs with an average annual sales of around 15 to 17 crores with estimated financials and demonstrated borrowing track records. And then if you are having a look at their commercial, so the wholesale lending products covering short, medium and long-term financial needs of selected sectors like auto component and ancillary manufacturers, light engineering, financial institutions. And in rural, they have unique hub and spoke model in 1,359 locations and retail presence across 19,600 plus points of sale. So they diversify rural lending model with 10 product lines across customer and professional business categories. So if you're having a look at deposits, at the end of financial 2020, Bajaj Finance Limited had a deposit book of 21,427 crore, representing a growth of 62% versus the end of financial 2019. Within the overall deposits book, retail deposits grew 92% year over year to 13,127 crore. Deposits contributed to 21% of standalone Bajaj Finance Limited borrowings against 15% as at the end of financial 2019. Also, they also have several partnership and services to cross-sell life insurance, health insurance, and many other services. Bajaj Finance co-branded credit cards business in partnership with RBL Bank grew strongly in financial 2020. The number of cards in force stood at over 1.83 million as on 31 March 2020. So Bajaj Finance Limited continued to grow its co-branded wallet business by providing EMI cards to its customers in digital format. It closed financial 2020 with approximately 15 million digital cards and disbursed over 660,000 loans under its 5,000 and 10,000 offerings on its co-branded wallet platform. So then if you are having a look at operating expenses as a percentage of net interest income, so in financial 2019 it was 35.3%, in financial 20 it was 33.5%. So it's good. So they are reducing their operating expenses as a percentage of net interest income. So in quarter 1 financial 20 it was 35%, in quarter 1 financial 2021 it was 27.9%. So it is very good thing. If we are having a look at their book size, so in financial 20 they have an increase of 26% from financial 19 to financial 20. In quarter 1 financial 2021 it has an increase of 6%. If you are having a look at their total income, they have an increase of 43% from financial 2019 to financial 2020. So at the same time, quarter over quarter, in quarter 1 financial 2022, quarter 1 financial 2021, they had an increase of 14%. If you are having a look at net interest income from financial 2019 to financial 2020, they had an increase of 42%. Quarter over quarter, they had an increase of 12% from quarter 1 financial 2020 to quarter 1 financial 2021. If you are having a look at the profit after tax, they had an increase of 32% from financial 2019 to financial 2020. And quarter 1 financial 2021 they had a degrowth of 19% from quarter 1 financial 20 to quarter 1 financial 2021 because they had a lot of provisions in this quarter. If we are then having a look at return on assets, it reduced from 1% to 0.7%. In return on equity, it reduced from 5.9% to 2.9%. So if it is adjusted for the COVID-19 provision, return on asset for the quarter was 1.49% and return on equity was 6.1%. The company is well capitalized with capital adequacy ratio including Tier 2 capital of 26.4% as at 30 June 2020. The Tier 1 capital stood at 22.6%. The company remains one of the best capitalized large NBFCs in India. Let's have a look at their AUM, asset under management. So their asset under management is increases at whopping 35% CAGR over financial 2016 to financial 2020. If we are then having a look at asset under management of different segments, consumer B2B auto finance business, they have around 13,085 crores. Consumer B2B sales finance, they have around 12,657 crores. So their consumer business to business auto finance business is doing very well. They had an increase of 35%. And in B2B sales finance, it has an increase of 3% from financial 2019 to financial 2020. B2C businesses, it increased by 36%. SME business increased by 23%. Rural B2B sales finance business is increased by 25%. Rural B2C businesses increased by 50%. Commercial lending business increased by 13%. Loans against security is decreased by 24% and their mortgage business is increased by 36%. Overall, their asset under management increased by 27% from financial 2019 to financial 2020. So then if you are having a look at loan provision and net NPA, loan losses and provisions for financial 2020 were 3,929 crores versus 1,501 crores in financial 2019. Bajaj Finance Ltd took an accelerated charge of 392 crores for two large accounts and made a contingency provision of 900 crores for COVID-19. Gross NPA and net NPA as of 30 June 2020 stood at 1.4% and 0.5% respectively as against 1.6% and 0.64% as of 30 June 2019. The provision coverage ratio as of 30 June 2020 was 65%. So their net NPA is decreasing because they have provided accelerated provisions. So that's a good thing. Let's have a look at their insurance business. So before going into their business, let's have a look at the insurance sector in India. So the life insurance industry in India is regulated by the Insurance Regulatory and Development Authority of India, IRDAI. 24 life insurance companies are licensed to do insurance business in India. Out of these companies, Life Insurance Corporation of India is the only public sector company. Total gross premium written for financial 2018 to 19 was almost $100 billion. Thus, the valuation of total premiums written life insurance plus non-life insurance in India in financial 2018 to 19 was around 7 lakh crore. Out of the total 7 lakh crore premium in financial 2018 to 19, 75%, which is 5.25 lakh crore, belongs to life insurance companies premium, and 25%, which is 1.75 lakh crore, belongs to non-life insurance companies premium. So then let's have a look at the insurance penetration in India. Insurance penetration rate indicates the level of development of insurance sector in a country. Penetration rate is measured as the ratio of premium underwritten in a particular year to the GDP. According to IRDA's annual report, India's overall insurance penetration for financial 2017 to 18 was at 3.69% of premium as a percentage of GDP. India's insurance penetration is one of the lowest across the world. Developed economy USA is at 7.14% as a percentage of GDP. UK is at 10.61%. Emerging economy South Africa 12.89%. Average of insurance premium across the developed economies as well as the emerging economies is almost 6.09%, and India is at 3.69%. So it is a very big opportunity for insurance sector in Indian company, since we are at 2% down compared with world average insurance penetration. With the increase in India's per capita income, insurance penetration is expected to see 50% growth by 2023. It indicates the prolonged earning visibility for insurance sector in coming future. As a result, the listed insurance players is going to enjoy the premium valuations hand in hand. So then let's have a look at general insurance industry. There is a growing share of private sector in non-life insurance segment. We can see how aggressively the private sector is growing in non-life insurance segment. Non-life insurance products can be broadly categorized into the following product verticals: motor insurance, health insurance, crop insurance, fire insurance, marine insurance, and other insurance products. So in financial 2004, there is 15% penetration of private sector and 85% belongs to public sector. In financial 2020, 55.7% is private sector and 44.3% in public sector. And then if you are having a look at the big players, there is New India which has 16.8%, ICICI Lombard 9.4%, United India 9.3%, Oriental 8.2%, National 7.9%, Bajaj Allianz 6.7%, and others 41.7%. So Bajaj Allianz has 6.7% market share in the general insurance industry. So then let's compare the industry with Bajaj Allianz General Insurance Corporation. Then in financial 2018, the total industry it was 1,41,500 crores. In financial 2019, it was 1,61,700 crores. In financial 2020, it was 1,78,700 crores. If you are having a look at BAGIC premium trend, so it was around 9,500 crores in financial 2018 of gross written premium, and in financial 2019 it was 11,100 crores, and in financial 2020 it was 12,800 crores. So if you have a look at the industry in quarter 1 financial 2021, it had a degrowth of 4%, and then in quarter 1 financial 2021, BAGIC premium degrew by 19%. Excluding crop, GMC, and government health, it degrew by 11.3%. So if we compare BAGIC with industry year over year, the industry posted one of its lowest growth rate in recent years, growing below 10%. Given this background, BAGIC performed well with an industry beating growth rate of 15.6%. The growth rate for the full year was badly affected in March 2020 due to the COVID lockdown, as sales of vehicle came to a standstill. It is worth noting that BAGIC's growth rate before the onset of COVID-19, that is up to February 2020, was 20.1%. Let's have a look at BAGIC. BAGIC is one of India's leading composite general insurance, offering all types of general insurance including motor, health, crop insurance, marine, and various forms of commercial lines of insurance. In an extremely competitive and dynamic market, BAGIC has over the years built a strong retail franchise and retained a leading position among the private insurers. They have an industry leading combined ratio consistently over time. BAGIC's combined ratio stood at 100.8% financial 2020. The business construct is to deliver superior ROE. So then let's have a look at their business mix. So in financial 2018, 44% they are doing motor insurance, 6% health retail, 9% group health, 15% is belongs to property, liability, and engineering, 20% is agri crop insurance, and 8% is other. If you are having a look at financial 2020, 41% is motor retail, 5% is health retail, 11% is group health, 13% is property, liability, and engineering, 19% is agri crop insurance, and 10% is other. They have predominantly doing motor insurance. In quarter 1 financial 2020, it was 43% motor insurance, 18% group health, 5% retail health, 19% property, liability, and engineering, 4% agri crop, and 11% others. If you are having a look at quarter 1 financial 2021, 36% motor retail, 7% health, 13% group health, 33% property, liability, and engineering, 1% agri. So if we have a look at quarter 1 financial 2021, that is after COVID, motor insurance took a great hit. So if you have a look at the effect of the lockdown, so the lockdown during quarter 1 financial 2021 has adversely impacted new sales in few segments. Motor insurance has seen a degrowth of 32.6% year over year on the back of lower sales of vehicles. Travel insurance has dried up in the first quarter due to limited opening of airlines and railways. With heightened need of protection, demand for health insurance has peaked with 15.5% growth in retail health in quarter 1 financial 2021 versus quarter 1 financial 2020. Among the commercial lines, property fire line has seen a significant growth in Q1 financial 2021, aided by hardening reinsurance dams. So on claims front, so fewer motor claims during lockdown. However, with gradual opening up, claim frequencies have started getting towards normal in the green zones. So lower health claim ratios as non-COVID elective treatments are postponed. As normalcy returns, there may be an increase in these surgeries. So COVID claims are rising for the industry. BAGIC is currently well reserved for expected claims, but the extent to which COVID spread will determine the actual claims. Let's have a look at their channel mix. So in financial 2018, 20% of the sales are done by individual agents, 8% corporate agents like banks, and 9% corporate agents other than banks, and 32% brokers and 31% direct business. In financial 2020, 20% of sales is done by individual agents, 12% corporate agents by banks, 4% corporate agents other than banks, 37% brokers, and 27% direct business. So their direct business is reduced from financial 2018 to financial 2020, which is not a good thing. In Q1 financial 2020, their direct business was 24%, and in Q1 financial 2021, their direct business reduced further to 20%. So that is not a good sign at all. So we have to be mindful. So then let's have a look at their net claims ratio. So their net claims ratio in motor total, which is around 66.5% in Q1 financial 2020, it is 68% in Q1 financial 2021. So if you look at the year over year, it is 62.4% in financial 2019 and 65.8% in financial 2020. If you're having a look at the total net claims ratio, it is 68.1% in Q1 financial 2021, 72.8% in Q1 financial 2020. Year over year, financial 20 it was 70.7%, financial 2019 it was 68.6%. Let's have a look at their AUM cash and investments. So their cash and investments is increasing steadily. So in Q1 financial 2021, it has an increase of 12% cash and investments. If you are having a look at their gross written premium, so they have a change from financial 2019 to financial 2020, it is 15.6%, and profit after tax is increased by 28.1%. So their claims ratio increased from 68.6% to 70.7%. Their combined ratio is also increased by 96.7% to 100.8%. That is not a good sign. And also return on average equity, so it is 16.2% in financial 2019 and 18.4% in financial 2020. And then if we are having a look at their performance highlights of Q1 financial 2021 over Q1 financial 2020, so the gross written premium reduced by 19%, net written premium reduced by 20%, net earned premium reduced by 7%, profit after tax increased by 88%, and their ROE is increased from 4% to 6.6%. We are having a look at their solvency ratio. Their solvency ratio was 280% as against regulatory requirement of 150% as of 30 June 2020. So then if you are having a look at their profit after tax, it is 921 crores in financial 2018 and it is 998 crores in financial 2020. If you are having a look at the trend of profit after tax on the right, so it is 564 crores in financial 2016, 728 crores in financial 2017, 921 crores in financial 2018, and it reduced to 780 crores in financial 2019, and it is again 999 crores in financial 2020. So then if you are having a look at their net worth, it is increasing steadily over time. So they are consistently among top 2 private insurers in terms of gross premium. Also, BAGIC has the largest network of bank assurance partners in the industry. Major relationships include Citibank, HDFC Bank, Bajaj Finance Ltd, Canara Bank, J&K Bank, IDBI Bank, United Bank of India, KVB, RBL, Union Bank, Karnataka Bank, Bandhan Bank, and Punjab National Bank. 10,000 plus bank branches expected to be added due to PSU bank mergers. Also, BAGIC continues to grow its AUM strongly. Investments are largely in fixed income securities. Investment leverage of 3.13x as on 30 June 2020. They're also working on several innovative projects. So fully digital onboarding of agents, point of sales persons, and other intermediaries. In financial 2020, over 10,000 agents were onboarded through the mobile app. So the POSP channel works entirely through digital interfaces. If you have to look at the growth opportunity or the outlook for the general insurance business, so in the coming years, it's likely to be mixed. Sales of new motor vehicles and investments in assets, which are key drivers of general insurance, are likely to be subdued. Motor insurance, travel insurance, and credit insurance are likely to be impacted in terms of growth. Demand for health insurance should pick up, and they expect the number of motor claims to drop. As of now, they are not expecting COVID-related health claims to be very significant in relation to BAGIC size, given the low level of penetration of health insurance and BAGIC's own market share of about 4%. So then let's have a look at their life insurance business. So even in the life insurance business, in 2003 there was only 2% private sector penetration. In 2019 it's about 33.8% private sector penetration in life insurance. So in the life insurance business they are present in terms of BALIC. So over last few years, BALIC, Bajaj Allianz Life Insurance Corporation, has transformed itself through strengthening of core teams at the senior management level in the sales and support departments, introduction of best-in-class products with innovative features, unveiling of new channels like proprietary sales force, new bank tie-ups like Axis Bank, Karur Vysya Bank, RBL Bank, and India Post Payments Bank being the most recent. They are focusing on individual rated new business, alignment of product mix towards traditional savings and production business, focus on new business value as well as renewal premium and persistency across cohorts and other initiatives. So then if you compare their growth rates with the industry, so BALIC they are growing at around 10.6% in financial 2020. So up to February 2020, in financial 2020 they grow at around 24.8%, but we compare it with private sector, the growth of 4.8% in financial 2020. They were grown at 10.6%. So it's they outperformed the industry. Also, if we compare the new business, it was 5.2% in financial 2020, and the other private sector industry it was 11.6%. So they outperformed in individual rated new percent but underperformed in new businesses, because the private sector they did about 11.6%, but the BALIC did only about 5.2%. Also financial 2020 up to February 2020, so the BALIC did about 22.8% growth in new businesses, but the private sector with a growth of 21.4%. So they were growing better until February 2020, but they had a severe impact of new business after the lockdown. Let's have a look at Bajaj Allianz Life Insurance. So they focus on all retail segments, mass and mass affluent customers. They have deep pan-India distribution reach with presence over 524 branches. Also, they are third highest agency premium amongst private players in financial 2020. In financial 2020, BALIC was able to drive a balanced and sustainable product mix with a view at de-risking its business from volatile market movements. As a result, the proportion of unit-linked insurance plans (ULIP), which are volatile and equity market driven, in the retail product mix was systematically reduced from 61% in financial 2019 to 52% in financial 2020. So then if you are having a look at their persistency, 13th month persistency remained steady and 25th month persistency saw an improvement. And then if you are having a look at the individual rated new business, financial 2020 has an increase of 11%. Quarter 1 financial 2021 the growth is flat in individual rated new business. Individual rated new business agency it has a decrease of 10%, and quarter 1 financial 2021 has a decrease of 16%. Institutional business individual rated new business it has an increase of 76%. In quarter 1 financial 20 has an increase of 28%. Individual rated new business PSF it has an increase of 20% in quarter 1 financial 2021. In quarter 1 financial 2021 it has a decrease of 17%. So then if you're having a look at the combined ratio, in quarter 1 financial 2020 it has a combined ratio of 103.1%. In quarter 1 financial 2021 it reduced to 97.6%, which is a very good thing because it's a measure of profitability of insurance business. And then if you're having a look at regular premium ticket size, so financial 2020 it has an increase of 10%. In quarter 1 financial 2021 it has a decrease of 40%. And also if you have a look at regular premium ticket size agency, it has an increase of 14% in financial 2020, and in quarter 1 financial 2020 it has a decrease of 52%. And then if you're having a look at their AUM, in financial 2019 it was 566 billion, and in financial 2020 it was 561 billion, and quarter 1 financial 2020 it was 579 billion, and quarter 1 financial 2021 it increased to 610 billion. And also if you have a look at their net worth, it is also increasing steadily. And then if you have a look at the gross written premium, it has a change of 10% from financial 2019 to financial 2020. And then if you're having a look at profit after tax, it reduced by 10%. So as a whole, the performance highlights of quarter 1 financial 2021 over quarter 1 financial 2020. The individual rated new business remained the same, and group new business reduced by 40%, renewable premium increased by 16%, gross written premium reduced by 7%, and PAT is increased by 111%. And then if you are having a look at the solvency ratio, BALIC is soundly capitalized with a solvency ratio of 745% as on 31 March 2020, which is well in excess of the minimum regulatory requirement of 150%. And then let's have a look at their exposure to stressed investment. BALIC has a total exposure of around 721 crores as of 30 June 2020, of which performing is 159 crores, non-performing is 561 crores, and they provided impairment of 567 crores. BAGIC has an total exposure of 360 crores, of which performing 185 crores, non-performing 175 crores, and impairment provided for 177 crores. Then let's have a look at their Finserv standalone business. So Bajaj Finserv owns and operates 138 windmills in Maharashtra with total installed capacity of 65.2 megawatt. During financial 2020, the company continued generating green energy, thereby contributing to conservation of the environment. Apart from revenue from sales of power generated by these wind farms, Bajaj Finserv also earns revenue from renewable energy certificates. Due to low winds, the windmill generated 792 lakh units in financial 2020, which was 10% lower than the financial 2019 generation of 876 lakh units. Revenue generated from renewable energy in financial 2020 was 39 crore versus 71 crores in the previous year due to the change in contract with the customer. However, this change also resulted in reduction in expenses and did not impact profit of the wind power activity. Also, Bajaj Finserv Direct Limited was set up as a wholly owned subsidiary of the company in financial 2019 with a long-term goal of creating a digital marketplace which offers the full range of financial products including loans, life insurance, general insurance, mutual funds, investments, payments, and selected e-commerce. In the course of financial 2020, Bajaj Finserv Direct Limited launched its platform Finserv Markets, and the initial response to it has been encouraging. During the year, the company incorporated a wholly owned subsidiary called Bajaj Finserv Health Limited. Over time, this entity is expected to create a digital ecosystem in the healthcare segment, connecting customers with service providers in the healthcare space, such as doctors, hospitals, nursing homes, pharmacies, diagnostic centers, and the like, by offering a complete range of products, including financial solutions. So, they are constantly innovating and introducing new products, so that's a very, very good thing for any company. So, then let's have a look at their income statement. Their revenue was 378 crores in March 2009 and it increased to 54,351 crores in March 2020. Look at that. And their net profit increased from 71 crores in March 2009 to 3,369 crores in March 2020. Look at the growth. They have a sales growth of 49.39 CAGR of 10 years, 36.82% for 5 years, and 30.41% for 3 years. And has a profit growth of 19.67% for 10 years, 14.84% for 5 years, and 14.2% for 3 years. And if you have a look at the return on equity, it is 16% for 10 years, 14% for 5 years, and for 3 years 13.63%, and last year they had around 12.24%. So then if you have a look at the revenue by segment, so their insurance segment provided 28,140 crores, wind farm 39 crores, retail finance 26,386 crores, and investment and others was 904 crores. So in total 54,351 crores. If you're having a look at profit after tax, their insurance business gave about 1,054 crores, wind farm 19 crores, retail finance 3,207 crores, and in total 4,176 crores. After the COVID impact, their profit after tax was 3,369 crores. If you're having a look at their balance sheet, their total assets increased from 22,535 crores to 2,51,304 crores. Look at the growth. They have grown tremendously and they are a net debt free company. So they have a very good solvency ratio and it's a very, very good thing for the company. So then let's have a look at the shareholding pattern of the company. So the historical promoter holding was 58.4% in June 2018 and it increased to 60.8% in June 2020. If I look at the historical FII holding, it was 7.5% in June 2018 and it increased to 8% in June 2020. Historical DIA holding, it was 4.1% in June 2018 and it decreased to 3.8% in June 2020. So there is a increase in FII and decrease in DII, so it's a neutral scenario. And then if you're having a look at number of mutual funds buying, holding or selling, so it was 144 in April 2020 and it decreased to 128 in August 2020. And then most of the holders are selling in the past few months. And then if you're having a look at the top holders, SBI ETF Nifty 50, they had around 0.77% of their AUM. Their AUM was 75,911 crores. And then Axis Long-Term Equity Fund, Axis Focus 25, SBI ETF Sensex, Kotak Standard Multi-Cap Fund, Kotak Equity Arbitrage, ICICI Prudential Balanced Advantage, DSP Equity and Bond. So these are the funds they are holding Bajaj Finserv Limited. And then let's have a look at the valuation part. So first let's have a look at their price chart. They have an all-time high of around 10,000 rupees and it reduced to around 4,000 and currently it's trading at around 6,000 rupees. So then let's project their revenues and profits. So financial 2016, they had a revenue of 20,533 crores and it increased to 54,351 crores in financial 2020. And I project for financial 2021, 55,438 crores, 62,645 crores for financial 2022, 72,042 crores for financial 2023. So they had a revenue growth of 2% for 2021, 13% for 2022, 15% for 2023. The net profit increased from 1,863 crores in financial 2016 to 3,369 crores in financial 2020, and I expect it to do 3,706 crores for financial 2021, 4,447 crores for financial 2022, 5,381 crores for financial 2023, with a net profit growth of 10% for 2021, 20% for 2022, 21% for 2023. Also, I projected this estimation conservatively because of the COVID impact and the possible disruption in the insurance business, and also possible NPA. So this estimation is conservative. They can do much better if the economy and the company do well. So then I estimated the price target with the current valuation with a trailing PE of 29. So for 1 year the estimate is 6,755 rupees, 2 year 8,106 rupees, 3 year 9,808 rupees, with the price cumulative growth of 11% for 1 year, 33% for 2 year, 60% for 3 year. So I estimate the price target with the PE of 30. So the 1 year price estimate is going to be 6,988 rupees. For 2 year, 8,385 rupees. For 3 year is 10,146 rupees, with a price cumulative growth of 14% for 1 year, 37% for 3 year, and 66% for 3 year. As a whole, they are a very good company. They have very good management. They are in a very good business. So insurance business is going to boom. I am very optimistic on insurance business. So this company has a great potential coming ahead. So one can buy this company for long term. So this is not my recommendation. This is my personal opinion. You have to do your due diligence before buying any stock. So that's all for today. Thank you for watching. If you haven't subscribed this channel, subscribe and click a little bell icon. Have a nice day. Bye bye.